Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 22nd, 2011. Well, folks, the markets are basically trading sideways on the flat line. The Dow Jones Industrial Average is down 10 points, NASDAQ is down about 8, and the S&P 500 is down about 3. So, a very small down day, flattish day on Wall Street. Volume is dead, and I'm dead serious. Look at the volume dry up here, especially over the last hour since the midday session took over, and people are out at lunch. Traders, Wall Street traders are out getting a bite to eat here. Volume just falling off a cliff. Now, the bottom line is you have to think, okay, well, what's going on here? What are we setting up for in the next few days? Right now, you would look at this consolidation pattern from yesterday's gap up and say this is sideways bullish consolidation because it's an in spirit of bull flag. So ultimately, this could tell us that the market may be headed a little bit higher. I think a lot will have to do where oil goes in the next few days. Oil is trading right now above 104, and again, we have to watch that closely because, again, if you look here, and we do have a little bit of an intraday pullback, but oil's still having a great day. If oil starts breaking through 105 in the next couple days, that could start to freak the markets out a little bit. And remember, if you go back 2 weeks ago, once we got above 100, the market started to worry about oil as it went to about 105 to 107. Then it pulled back. Markets have rebounded since then. I think if you get back above 105, the markets will start to worry a little bit. Right now, it's fine. If the oil kind of stays around 105, 104 area, I think that's fine, and the markets will go higher. Things overall in the global picture are quieting down just a little bit. You're not having any new events, which is keeping the markets in a stationary sideways consolidation mode, all right? Also, volume as it lightens up allows POMO to come back in and work. Remember, last week, the Federal Reserve stopped using POMO, and the previous week because the volatility was too strong. That was code word from the Fed for meaning that there's too much volume in the market, and they're $6 to $8 billion in POMO a day, permanent open market operations, has little impact when the volume is that high. As the volume has declined over the last couple sessions, obviously their POMO is back at work, keeping the markets up as much as they can. All right, and again, we'll keep a close eye on things here in the afternoon session, but it looks to be just a flattish day on Wall Street. We did have the commodities down early today, but they have come back to the upside. Take a look here at the USO I just pointed out before. Early starting to the downside, but a really strong move up, and it's a little bit of a pullback into the 20 moving average. If you take a look at the GLD is still down on the day, down about 25 cents, but the SLV, again, is up 6 cents on the day, starting out lower, surging to the upside, and then chopping around, kind of a flattish day across the board except for oil. All right, let's take a couple looks at different stocks in motion today. I want to focus on a couple key stocks. The first one I want to talk about is the CVX Chevron. Chevron symbol CVX is trading at new 52-week highs today. It hit a high of 105.94, currently trading at 105.70. This stock, again, if you go to your monthly chart, take a look at this, folks. Pivot double top getting pierced from 2008, which is an amazing feat because oil was at 150 bucks back here. Oil's only at 104ish now, and Chevron continues to make new highs. It is getting a very interesting in terms of possibly being a short, but I'm not quite ready to pull the trigger just yet. I want to see if there's a little bit more upside on it before I do, and I'll watch it very, very closely. ExxonMobil is kind of an interesting play here because look at the differences in the charts. Here's your 2008 high on ExxonMobil, symbol XOM. And then look at the pullback, and Exxon is definitely far below the pivot top here. So again, while Chevron's all the way taking out the 2008 highs from here, ExxonMobil is clearly far below that. And again, a much weaker stock on Exxon than is Chevron. Now some other stocks in motion here. Apple Computer, symbol AAPL, getting a small bounce today, although it is starting to roll over just a little bit. We did call a perfect bottom on this the other day. If you go to your chart here, we added this to the Bullish Pro Trader watch list last Wednesday, I believe it was, just as the stock hit this pivot low. Look at the stock moving up. If it continues up, you'll see great resistance right at this little bit of a necktie. That's essentially what I'm looking for on the spiders as well. If we trade up into that necktie on the daily spiders chart, SPY spiders, S&P 500 ETF, right here at around 130.65, you should meet some good resistance at that point. All right, and again, today looks like a little bit of consolidation. Yesterday, after the gap up, was consolidation. The markets are taking a breather. Think about it like this, folks. Look at the volatility you've had. You basically hit a new 52-week high and 100% gain in the markets on February 18th. Then on February 18th to essentially last Wednesday, which was March 16th, basically in a month's time, the markets dumped out all the way from 134.69 down to about 125. Almost a $10 drop, folks, on the SPY in a month. Then a bounce back, a 3-day surge leading up into yesterday's move. The markets are tired right now. I mean, the volatility, they've been whipped back and forth. You've had issues in Europe, but more so issues in the Middle East and in Japan based off of the tsunami, earthquake, and nuclear disaster there. It's just more of a quieting sensation. The markets are looking for a little bit of peace of mind right now, a little bit of quiet, and it does seem like they're trying to gather it today. If we go to the intraday chart, you can see it's just a sideways float, really from yesterday. I mean, you can see we were hovering between these two trend lines, resistance up here, support down here, sideways all day. We broke below that level right here, coming down to the gap window area just above the blue and white pink trend lines, or the white and pink trend line right here. And then I've just chopped around since, but it's all in that sideways consolidation mode. Upward move, sideways, and again, at this point, you'd recognize that as an in spirit of bull flag. Whether or not it holds up, we'll have to find out later in the day and into tomorrow whether it plays out or not. All right. Some other stocks to keep in mind here as we continue to follow the markets on this very, very light trading day. Cisco Systems continues to gain. Again, that is good to see, as I did give that out to our members in the Research Center on the bullish Pro Trader watch list. So that continues to float up even with the markets being a little bit weaker. Good to see there. I'd like to see this get back to about 1785. That would be a general short-term target on a price on Cisco. All right, some other stocks in motion today. Let me just scan my watch list. IBM is basically flat on the day, up 6 cents. That stock, again, if we bring up the intraday here, as it slowly comes up, you can see same thing. Big move yesterday and then sideways consolidation, kind of at the lower ranges of the day right now, but still holding steady. The dollar, let's take a look at the dollar, folks. The dollar is flat on the day, and again, if you go to the daily UUP chart, which is the ETF for the dollar here, you can clearly see that the dollar has broken down below support. It confirmed below. That means this blue line now becomes major resistance on the upside. Any bounce, that will be heavy, heavy resistance on the upside. And again, I do think the dollar is probably heading a little bit lower short term before a bounce, maybe to about 21.50 on the UUP and possibly as low as 21. All right, technology stocks are weak today. You have Apple, as I mentioned, positive. Google's positive. Google's now flat as it sells off just a little bit. Baidu's positive. Amazon's negative. Intel's negative. Microsoft's just fractionally negative as well. So again, a mixed bag. Financials continue to be weak. That we noted that yesterday, that it looked like the financial stocks were having money flow out of them since they gained very strongly late last week, and the money was going into technology yesterday. Today, everything's just basically flat, with financials still a little bit weaker. You have Goldman Sachs up $1, but JPM, Bank of America, and Wells Fargo are all negative. All right, so that's about all we have right now, folks. Again, it's a very light trading day. Let's go back to the spiders and just take a look at the intraday, the SPY here. And if we click on the intraday, you can clearly see that we're still kind of floating down. You'll have a little bit of support down in this range to watch. And again, we'll monitor it in the afternoon session. Reminder, folks, come join the free trial at In the Money Stocks. You can take a free trial at the Research Center, where you get swing trades, education, market analysis, stock analysis, commodity and currency analysis, all under that one Research Center, which is all a free trial, 1 week. And also the intraday stock chat. If you want intraday calls, intraday analysis, you want to ask questions of us as chief market strategists, come feel free to join us there and take that free trial, 1 week on the intraday stock chat as well. Take care, folks. Have a great afternoon and evening.